We're here to talk about real estate in Silicon Valley, week number 25. This is looking at the sale price to list price distribution for each week. The purple line at the bottom is the most recent week. The best week we've ever had was not that long ago on March 26, 2022, so just earlier this year. And that is in the red dotted line at the top of the graph. And what you can see is the dotted lines down through here and then up through here, and then finally the top line, March 26, are the highest and best performing lines. Those are the oldest lines, and they were in the upward direction. Then we turned around and we went to the dashed lines, and the dashed lines basically were at the plateau. So there was a lot of bounce for 8 weeks. And then we got into the solid lines, which are the most recent 8 weeks, and it's basically been climbing down, going towards a slower marketplace, less competitive bidding from the buyers. We're still in a very good marketplace. Optically going from here to here looks like it's maybe 60% of the distance down to the worst month we've ever had. And that might give the perception that there's been a really dramatic change. What's very interesting about this graph is it's very difficult to get the line to move below 100%. As this graph moves closer and closer, it takes more of a change in the marketplace to have it move at all. Even though it's, like 60% of the distance, it's probably only something like 20% or 30% of the market activity. This is the same graph, just only 12 weeks. So I won't go into detail, but you can see the dotted lines now, which only go back to April 9th. So very close to the peak, but you can see the dotted lines were all at the top, followed by the dashed lines, followed by the solid lines. Now, this is looking at two different aspects of available listings. So the blue line is the total number of available listings. So you can see at the beginning part of this year, we only had about 70% of the inventory we'd expect to have. Then basically right around April the 2nd, April the 9th, depending on what data point you're looking at, we got up to 80%. And then we climbed very rapidly to about 110%. And we've been bouncing between 100 and 120%. So average that out at 110%. So we finally have a little bit more inventory than the 5-year median. The 5-year median I use is 2015 through 2019, which were 5 good years. If it was a completely normal year, you'd be right on the yellow line at 100%, because this is a percentage of that 5-year median. The other component is the number of new listings in each given week. And you can see there's some huge fluctuations. This is to do with the holidays. I believe that was Memorial Day. And Memorial Day came late this year compared to the 2015 through 19. So you had a large run up in inventory on a percentage basis the week that Memorial Day normally happens. Then when Memorial Day happened this year, there was less inventory than normal because most of the years that Memorial Day was behind, and that's what happened. Now we're having the same thing, which I think is associated with Father's Day that's now in the rearview mirror, and July the 4th that's coming up. A lot of the new listings that might have come up next week got moved forward to this week, and so you had more new listings coming on the marketplace. But the real takeaway on this is the red line, and that's flipping over to looking at the demand, number of offers accepted. You can see for the first part of this year up through basically April the 9th, which is this point, that's actually April 2nd, I believe, and this is April the 9th. You were basically at 120% of the number of offers that you would expect to have happen. Then quite dramatically, we dropped down to 80%, did a little bouncing, and we're basically going to settle down. It looks like it maybe 80% of the volume, except this week, we went down even more. And offers accepted, volume, number of buyers willing to buy, is a very important indicator of where the marketplace is going. Now, this is converting that slide we just looked at to days of unsold inventory. Days of unsold inventory is the ratio between the available inventory and the number of offers being accepted. And now, instead of being a percentage, we're in raw count. So anything below 40 days is what I consider to be a red hot seller's marketplace, which explains the shaded red. And you can see for the 5-year median that I'm using for my base, which were the 5 years before COVID, you were down somewhere around 35 days at this time of the year, maybe a little bit lower, maybe 34, 33 days of unsold inventory. Now we're sitting here at something like 55. We're quite a bit higher than where we were in a good year. 55 is on the low end of a balanced marketplace. Because we just came out of a seller's marketplace, buyers are still conditioned to overbid. What's really important is what's going to happen on this graph long term. thin blue line is my warning alarm, basically. If you are going up more than 5 days per week, that's a real issue. We're basically right at that threshold. I'm downplaying it a little bit because you can see the 5-year median normally rises at this time of the year. Even though you have a 5-day per week increase, you'd expect maybe 2 days per week increase. So the net impact is only 3 days impact per week. There is clearly a change going on, but it's not a dramatic slam on the brakes, but it's still definitely a change. This shows that change a little bit better. This is the number of offers accepted just in 1 week, which is why there's so much fluctuation. And this is the slowdown that we saw from COVID. So you can see that when you basically have a shutdown in the marketplace, it does impact the number of offers accepted. And if you look at the blue line, which is the current year line, 2022, and just for clarification, all the O1s that up here are just there. I should clean it up a little bit. I wanted to get the year there, and that was the only way I could figure out how to do it. The blue line is the current year, and you can see we were basically having the second best year, second only to 2021. 2021 was above where you'd expect it to be because of the pandemic. People didn't buy in 2020, so they bought in 2021, giving 2021 extra volume. 2022 was a very good year as far as volume of transactions. And then right about here, right around April the 9th, all of a sudden, this is April 2nd, April 9th, April 16th, right in there, it started to change and got sort of in the middle of the pack. And then by the beginning of May, all of a sudden it was the lowest year. And now it's getting to be the lowest year by a significant number. So this past week, we only sold something like 620 listings. And that's Santa Clara County, San Mateo County, condos and townhouses, as well as single family homes. The normal numbers up here, somewhere around 1,100. You're about 50%, a little bit higher than 50%, maybe it's 60% of the volume of inventory you'd expect to happen. That is not good for the long-term health of the marketplace. This is looking at it going back further over time and also over 5 weeks instead of 1 week. Up to now, we've been looking at 1 week data. So now we fluctuate to 5 weeks. Why did I do that? It's a lot more stable. It's a lot better indicator of what's going on with the marketplace. And you can see the blue line is the number of new listings that have come on in the past 5 weeks. These aren't necessarily listings that are available today, but it's a sum of all the new listings over the past 5-week period of time. And then this is the number of new offers over the 5-week period of time. So you can see that the new inventory coming out in the marketplace has been greater than the inventory going away through offers. So in the long term, that is not going to bode well for the real estate marketplace. Note this change here, just for clarification. Last week, there was a database issue that I had no control over. It was actually with the user interface. So the data was there, but I couldn't access it. So I regenerated the data the best I could, but it's going to be different than my normal data. And there's no way to get accurate data. Basically, the user interface was impacted from June the 15th through Monday morning. It was almost a full week, and I couldn't get accurate real-time data. And on a database that changes every minute, potentially, there's no way to go back and get the accurate information. So I used my best estimates, but you can see there's a little fluctuation. But the current week data down here or up here and down here is accurate. This is looking at the UI over time, and you can see that we have climbed up fairly significantly. We're getting to some of the highest numbers we've had in the last 8 years, going back to 2015, and probably even further than that. But that's not what you really need to be looking at. You need to be looking at 50 days of unsold inventory. That means we would sell everything on the marketplace in 50 days, including the overpriced turkeys, if no new listings came on the marketplace. That is still a fairly strong marketplace. I consider anything 40 to 80 days to be a balanced marketplace. You're at the lower end of a balanced marketplace, and it takes time for that impact to reflect into the actual offers that are being negotiated. This is now looking at median days and average days on the marketplace. I don't think this graph is very meaningful. And the reason I don't think it's very meaningful is look how little these numbers have changed. You went from maybe 7 to maybe 9, an increase of 2 days. Your average has gone from something like 11 to maybe something like 13. Again, a 2-day increase, very minimal, where the real increase in the marketplace is huge. And so I put this in here, one, to show why I don't use it, and two, because a lot of the media reports talk about the median average days on the marketplace. So I put it on there to show that it's really a meaningless data point. Now we're looking at the sale price to list price ratio. We're looking at the past 5 weeks. We're looking at macro data, which is Santa Clara, San Mateo County, single family, as well as condos and townhouses. Look at the rollover that we've had. Now, this rollover started right around that April the 2nd number. So even though the market was still aggressive, the buyers felt a let up on the pressure. Now, when you start looking at this data, orange is median. So the median overbid is about 6.5%. The typical seller is getting 6.5% more than their asking price. The average seller is getting 8% more than their asking price. And the reason that's higher is some people will go in and offer 60% above. It's very unusual for a seller to take more than a couple percentage off their asking price. It's very easy for the average to go up, but not down. So the average is always going to be greater. I typically, historically, was following just the average because the median I assumed would be at 100% a lot of the time. And you can see it was at 100% here as well as here. So you couldn't see market trends, but it's really not at 100% as often as I anticipated it being, especially when you're in a strong marketplace. So I punted and now follow both numbers. And then finally, the gray number is the percent of sellers that are getting more than their asking price. And you can see something like 79% of the sellers are getting more than their asking price. When nearly 8 out of 10 sellers are getting more than their asking price, you clearly have a strong marketplace, but it wasn't as strong as it was back in April, where 9 out of 10 sellers were getting more than their asking price. This is the sold price. You can see at the upper end, it really hasn't gone down. It's interesting. The median has rolled over quite a bit. I don't know exact numbers because there's a couple different medians. This is macro medians. I think this was about 1,610,000. And I think we're down to just about 1.5 now. So you've lost almost 10% in the median price, but is that really property value or is that market mix? The upper end hasn't really changed at all, and the lower end really hasn't changed at all. There was a little blip up. So I would tend to think that this is more a market mix. How could that happen? If all of a sudden a larger number of lower priced homes were selling versus higher priced homes, and there would be some pressure to move to lower priced homes with increasing interest rates because people's income doesn't go up overnight like the interest rates went up overnight. So they now can only afford a smaller house, a smaller priced home. So that brings down the median price of what's actually selling. Now we're changing gears a little bit. We're adding in 2 more counties. We're adding in Alameda County and Contra Costa County. We're looking at 1 and 5 week data. What are we looking at? We're looking at the number of new listings are basically up in Santa Clara County and they're up in San Mateo County. Now, I don't think they're really up. This is the last week number of new listings in those 2 counties were the ones that were most negatively impacted by the bad data. I'd really punt and look at Alameda County and Contra Costa County and say the new inventory is basically flat. A 1% change is really insignificant. This 0.3%, it's 1 listing difference. So I think this 11% gain and this 28% gain is an underreporting of new listings from last week. If you look at the number of new listings over the past 5 weeks, the gain is a little bit more consistent. And again, what I would do is put more weight on the middle ones here, which showed a gain of close to 20%. The 2 that I think are questionable are a lower gain of 14%. It's hard to really say. Unfortunately, on 5 week data, the bad data is with us for 5 weeks and it doesn't get less impact. It's 20% of that data point until it drops off. Then you look at the number of offers accepted. Again, you got to be a little careful with the number last week. This number could be high or low. I try to adjust it. It is interesting that Santa Clara County is down 12% and San Mateo County is up 22%. I suspect we're probably closer to this downward number in the other two counties that weren't nearly as impacted as much. So I would suspect that this 12% is somewhat reasonable for Santa Clara County. I suspect that my San Mateo County adjustment was a bad adjustment for whatever reason. Then you just look at the raw counts. You can see that you went from 405 offers accepted last week to 392, so not down that dramatically. And this is on a 5-week basis. And, again, these numbers are a lot more stable because there's 5 weeks. So whatever impact I had for my bad week is only 20% of that total amount impacted. It's basically diluted by the 4 weeks that are good. DUI is accurate for this week, and you can see 52, 56, 52, 53, fairly consistent. Overall, for all 4 counties, you're at 53, and DUI could be impacted from last week as well. Don't want to sound like a broken record, but if I had the inventory wrong and the sales wrong, the ratio could be wrong as well. Then we're looking at closings versus offers accepted or new listings. And this is just to give you an idea what's going on. So the number of closings this week is 143, 141, 131, 67. They normally close 241. So you can see that you were down significantly. And I'm sorry, this is 1 week data up here. My 5-week data is down here, 982. That makes a lot more sense. We sold only 143 houses in 5 weeks. That would be something. And so then on the 5-week data, because it's more consistent, I break down and look at the amount of overbidding. So you can see that Santa Clara County is the second lowest amount frequency of overbidding. The magnitude is the second lowest. But, all these numbers are fairly significant when you're starting to get 108%. And on closing data, I don't really have the problem from last week because closed data doesn't get impacted. So I was able to go get accurate data. And then the amount of appreciation over the entire 2020 calendar year. So we've had 32% appreciation. And that may sound like a lot, but we should see in a little bit that that's down quite a bit from the peak. With that, I'm finished my quick recap. We're here to talk about week 25. Here's how you join us Saturday morning live. You put in the green URL and add in 2022 for the handout, the green URL plus H for handout 2022, 0625 for the month and year. To get to the archives of these sessions, you type on the green URL by itself, and that takes you to my YouTube channel. And any specific episode, you just put in the 8-digit year, month, date code. Do I have any questions from anybody? Not hearing anybody, I'll go on. And if you, at this point, feel free to interrupt if you have a question as I'm talking about a slide. Same concept. The yellow line is the 5-year median. The blue line is the current data. This is the number of active inventory. So you can see we're basically above the level you'd expect. It happened a few weeks ago. You were even here. So basically looks like maybe 21. It's hard for me to do. Well, this is 25, 24, 23, 22, 21. So week 21 was the first time we were really below. We sort of caught up this past week, but again, I think that was Father's Day, bringing down the inventory for last week. And Father's Day does move around a little bit. This might have been the Father's Day impact from most years. And July 4th, obviously, is always on July the 4th, but what week it falls in is also moves around a little bit. I would expect inventory to actually drop off a little bit from the current levels. This is the number of new listings. This data actually tracks pretty well. So the number of new sellers coming on the marketplace, the number of sellers that are fleeing Silicon Valley, as the media likes to say, is exactly where you'd expect it to be. So nobody's fleeing the valley, nobody's leaving. Everything's happening at the normal rate. The number of new listings coming on the marketplace has been consistent ever since the pandemic. So we're approaching 16 months of extremely normal level of seller activity. What's been abnormal is the number of buyers. And this is where you see the number of buyers. You can see last year, the blue line, the offers for the current year have been consistently above the yellow line. Right at the end of the year with the holidays, it got back down to the normal level because it's, the holidays have a bigger impact than COVID. And you can see at the beginning part of this year, we were quite a bit above. But then boom, starting right here, which is, I think, April the 9th, dropped down dramatically. And you flip from basically 10, 15% above the 5-year median to 10, 15% below the median. So you've had a shift of something like 20 or 30%. So call it 25%. That's pretty significant. And the gap actually appears to be widening. Now, It might be that the number of offers last weekend were down because of Father's Day, and this weekend they'll go back up before we could, because this is not a holiday weekend, and then the weekend after it will go back down again because of July the 4th. This is DUI, and here's my 5-day per week warning line. And again, if the line now, if the real data, and these are the three major components, which are Santa Clara County single-family homes in the red, San Mateo County single-family homes in sort of the gray-brown, and Santa Clara County condos and townhouses in the yellow. If we were slowing down at the rate that would alarm me, the distance between the data here, the three data points, my blue line would be the same as up here, and it clearly is not. So we're not quite at that 5-day per week limit, and this is a time of the year when it normally increases. It's something to watch. I'm not sounding the huge alarming bells. We're not getting slammed into a buyer's marketplace, but the pressure is definitely coming off of the buyers. Here's my days of unsold inventory, and if you go back even even just last week, there was no blue. So now we have some blue because you're up to 90 days in the expensive areas in San Mateo County. This graph just a few weeks ago would have been almost all red, indicating a red hot seller's marketplace. Now, this is single family homes only in both counties. And a lot of the areas are white, and that's because it's a neutral marketplace. Anything between 42.5 and 75.5 is completely white. If you get below 42, you can start seeing the peak comes in, the pink comes in, and here's 41.5. And I don't know if you can see it on your screen, but there's a pink box right there. Very small shade of pink, but that's because it's just a little bit below that 42.5. Here is DUI over time. So you can see if you went back and envisioned that this would be the map, it was almost all red in May 7th. And, starting around June the 4th is when it really started to lighten up. And if you think about it, this requires sold prices. So this reflects on the market what happened 5 weeks earlier, which is getting back into the end of April timeframe. And it gets merged a little bit, which is why it's a gradual change, because some escrows close quickly and some close lower. But you can see as you get over here to current week, this data over here is clearly much whiter than any others. And even, like the coast went from, and this should be all accurate data, and the coast is a fairly small sample size. So you went from a balanced marketplace to a seller's marketplace to a balanced marketplace. And that could be just a couple extra homes selling the week of the ending on the 18th. This is the frequency of overbidding, and you can see that, again, it's sort of been rolling down. And then all of a sudden, right here, about maybe 2 weeks ago, it took a fairly significant drop. Again, frequency of overbidding requires sale price. So you go back to the left of the purple vertical line is 2022, to the right is 2021. Last year, you spent most of the year right around 80% of the sellers getting overbid. This year, that's where we started off, but we quickly got up to 90%, and now we're dropping down, and we're currently at 16, looks like close to 69%. This is the 3 county data points that I've follow, the 3 biggest micro market areas. And I've intentionally put in some blank space here because when I had no blank space, it was really hard to tell if I was getting the current week data. And sometimes I assumed I had the data. It looked like I had the data. And then when I looked at it under magnifying glass, I didn't. So this helps me make sure I report the correct data every week. And that's why you have blank space. But basically, you can see you rolled over, but all 3 areas are basically at 80% or better. Santa Clara County is the lowest at about 79%. Here's the frequency of overbidding. It's a red hot marketplace still, but this is basically 5 weeks delayed from the DUI. So if you go back up to my table, and 3 weeks ago is when the DUI started to get white. In another 2 weeks, another 3 weeks, I'd expect the frequency of overbidding to get whiter. Now, I don't expect the frequency of overbidding to get as white as the magnitude, because with frequency, if you spend $1,000 more than the asking price or $100,000 more than the asking price, both of them account as being over the asking price. The frequency isn't impacted, but the magnitude will be. Here is the magnitude, and you can see how that has rolled over much more, and it basically started to roll off back around April the 9th, which is where I maintain the market sort of started to change, and it continues to change with some fluctuations. So now you're down to 105%, which is lower than we were all last year, but think back to last year. Last year was a pretty aggressive year that most people thought was pretty aggressive. This year was super hot. I mean, we never had a year like this. From my sale price to list price distribution, the March 26 overtook any past year. And I have data going back to 1997. That just tells you how strong we were. This is the magnitude of each of the three components. You can see condos and townhouses are a little bit more stable, but they rolled over as well. Santa Clara County single family homes is coming down the most significant. It was at the highest amount of overbidding at about 116%. And now you're down probably at, as I said, maybe 107.5%, maybe 108%. Here's the overbidding geographically. You can see the same concept. You can see the magnitude of overbidding is a much paler red color than the frequency of overbidding. And that's because buyers will ratchet down the amount they're overbidding pretty rapidly, but they're still willing to overbid. Here is looking at the price over time. So you can see now when you're looking at just the median price of that's San Mateo County median price. It's dropped down. Santa Clara County median price has dropped down. Santa Clara County condos has been pretty flat. Condos tend to be more stable. And again, this may not be real property values. This may be buyers that used to be able to purchase $1.5 million now can only purchase 1.2 million. So they're settling for a smaller house, dropping the median price of what's actually selling, because that's how you define the median price. This is the sold price range. The color on this graph rarely changes, but the numbers change each week. The middle number is the median price, which is what assigns the color. The number to the left is the cheapest 10 percentile, and the number to the right is the most expensive 10 percentile. This is showing the appreciation. So go to the week of the yellow, which is the record high, and then the current week, and look at the drop, 57% to 35%. 43% to 31%. These are some pretty significant drops. I think this is when you talk about micro markets, the houses really can't change that much. So this is more closer to what's happened with actual property values. Buyers were in the hype and were paying a premium just a few weeks ago. These are closings, in the month of May. May saw basically record high closing prices. And now in the end of June, you're off fairly significantly from that. And not a single micro market area is at a record. This actually is surprising when you come down to condos and townhouses, 5% over 2020 pricing, down 1% from 2020 pricing, up 5% from 2020 pricing. That kind of gain is pretty small over that period of time. Now, this is looking at current market conditions. So you can see if you look at DUI, where there's no lag time for the length of escrow, you can see how much paler the colors are. Frequencies is redder than the magnitude, but both of these are significantly redder than your DUI. Sold price is not related to the colors of the others. This is simply based on whether you're above or below the median price. Redwood City down here is the median, the 2.2 million. So if you're above 2.2 million, like 2.3, 2.5, you go slightly pink. The more above you go, the redder you get. The expensive areas in San Mateo County are the most expensive at 4.75 million. So it's saturated red. And then you go down and you go saturated blue at 1.1, I'll call it $1.2 million. This is the breakdown of the different areas. You can see inventory now in Santa Clara County is 106% of what you'd expect. It's black because that's a balanced marketplace because it's between 95 and 115. San Mateo County is at 136. It's blue because it's above the 115. Same with Santa Clara County condos. Here's your DUI, 51. And again, remember last week, you have to take these numbers with a grain of salt, but 51, 49.5, 47, 50, you can see those numbers are coming up. The frequency of overbidding, the magnitude of overbidding, and the appreciation. So now you can see Santa Clara County peaked out at 43% appreciation this year, and it's down to 31, still up 7% from last year, 2021's peak. What's interesting is you go down to San Mateo County single family homes, and it's now at 21.7% above the 2020 pricing. And in 2021, it was 24.6%. So the price in San Mateo County is actually now below the peak pricing of 2021. Here's comparing almost apples and apples. We're looking at June 25th data, and we're comparing it to July fixed data for every other year. You have to be a little bit careful, but you can start seeing days on market is up a little bit. But the real takeaways is DUI, you're at 50 versus 29. You have to go back quite a way to get to a higher DUI. I think you have to come back all the way to 2011. So even though this is still technically a balanced marketplace leaning towards a seller's marketplace, normally we're a much hotter marketplace. You were cooler back here in 2007, 2008. And then the volume of sales, which is what's raising up the DUI, I think that's 831. That's down dramatically, 23 days. Well, actually, it looks like that's a record low. I'm not seeing any sales anywhere close to this low. We're having fewer sales. Now, again, that's pretty alarming, but you also keep in mind the 58 days and 42 days here, the number of offers accepted have been decreasing even though the population is growing. It's just people are staying put longer. Then the magnitude of our bidding, this lags behind 8% over. That's like the second or third strongest year. Frequency of overbidding is the second strongest year, actually the third strongest year because 2018. And here's your median price of 1.8 million. And then the square footage. Number of closings is close to the bottom, but that will get lower as the number of offers moves through the process. And this is comparing apples and apples, but it's looking in the rearview mirror. This is data for May. We won't spend any time on it. It's the same representation. And with that, I'm finished for this recap. I'm available for any questions. If anyone has any questions, not hearing or seeing anybody trying to unmute, I will say goodbye. Have a good week, everybody.